SOT Megaline. Superior clarity for a universe of possibility.
Sri Lanka Insurance, after its privatization in 2003, made some smart investment bets. Those investments have yielded rich dividends for the government after its privatization was reversed last year. In this week's In Focus, we look at SLIC's strategy under government ownership.
State-controlled Sri Lanka Insurance Corporation is on a roll because its former owners made smart investments during a downturn. The Distilleries Group appointed management picked up 6% stakes in John Keel's Holdings and Haley's at 62 and 93 rupees a share and a sizable stake in Chevron Lubricants. Those JKH shares now trade at 178 rupees and Haley's shares at 185. The equivalent of a Chevron share bought at 85 rupees before the share split is now 292 rupees. Last year's rate cut also increased returns on its 16 billion rupee gilt portfolio.
Board, if you do have any questions, ladies and gentlemen, please.
On the back of these gains, SLIC offered its life policy customers 3 billion rupees more interest above the contracted amount. Managing Director Nalaka Godaheva says the bonus is the largest offered in 1 year. He is confident that returns can be sustained. SLIC's share investments topped 8.3 billion at end 2008. End 2009 values will be revealed with its annual results soon. The market rose 125% last year. Harry Jayawardena's aggressive equity investment strategy is now paying off for SLIC's new owners. Nalaka Godaheva is Managing Director of SLIC, or the Insurance Corporation.
We have a certain portfolio of different types of investment. Some are with the government, some are with the private sector, some are in the equity market, some are in the stock market. It is our job to manage these funds effectively and give a better return. I mean, when we increase our bonus percentages by 40% this year, we have done that estimate. We know we can continue to give that return back to the people.
Insurance industry-wide equity holdings accounted for 14% of investments. At SLIC, the equity share of investments was double the industry average at end 2008. A government directive will also boost SLIC's 23% market share, which ranks it the second largest insurer. A Treasury circular in October directed all government and semi-government institutions to only deal with state insurance firms.
This will easily contribute to about 30%, the government sector, but some of those businesses are already with us. But what will happen is even those businesses which are not with us will now come back to us.
Godaheva forecasts government general insurance business coming back will raise turnover 20% this year. He claims SLIC won't be self-righteous with their freedom to price risk for government.
We do not consider that as a kind of a monopoly. We will try our best to give the best service and the best rate even to these government institutes.
Godaheva was appointed chief executive of SLIC after billionaire businessman Harry Jayawardena acquired the firm when it was privatized. Jayawardena-controlled DCSL paid 6 billion rupees for the 90% stake in April 2003. Subsequently, Godaheva was eased out of SLIC only to be reappointed managing director by the government after the Supreme Court reversed the Insurance Corporation privatization. Insurance reduces risk families and businesses, making them less of a burden to society. SLIC's objectives are now widely shaped by these principles.
The primary objective of us is to ensure that the insurance penetration in this country is increased. So all our strategies are aligned towards that objective.
Under DCSL ownership, SLIC made around 600 million rupees annually. In 2008, its profits were 583 million rupees, the last full year for which accounts are available. Generating similarly robust returns may be challenging because interest rates have bottomed and stocks are trading at more than 20 times their forecast earnings. RAM, a ratings agency, in an industry report, points out that firms will face an uphill battle to maintain margins in the face of falling government debt yields. RAM argues that firms will have to concentrate on improving their underwriting results to maintain margins. SLIC is also counting on its new ownership to attract policyholders.
We have huge potential to grow because if you look at pre-privatization, Sri Lanka insurance was doing actually extremely well because insurance is a trust-based business. And when you talk about trust, people naturally trust the government.
Under private ownership, SLIC market shares slipped from 29% to 23%. A rapid change in the investment climate with interest rates falling, however, may benefit the industry, life insurance in particular.
With the falling interest rates, the short-term investments people will move away from and will look at long-term investment which can give better returns. Now, life insurance in that definitely be a more attractive investment opportunity.
Its other focus will be health insurance. Lanka Hospice, formerly called Apollo, controlled by SLIC. The two firms recently unveiled a laboratory testing center and an insurance office in Colombo. SLIC is seeking synergies with Lanka hospitals while breaking ties with Harry Jayawardene-controlled distilleries group.
From this point onwards, we will look at any relationship from a commercial point of view. And in that, as I mentioned earlier, there's no difference. If it is a fair transaction, we will do a fair transaction. If it is an unfavorable transaction, we will not continue that transaction.
Under DCSL control, the insurance corporation developed close ties with Harry Jayawardene-controlled firms. Management of its computer system was also Lanka Bell, and a project with a large vehicle repair facility was initiated. These are now being slowly unravelled.
Whether money has been taken out unfairly or not is something that we will be able to tell only after a proper audit is conducted. That is what the Auditor General's Department is doing right now.
A deal where SLIC insured accident-damaged vehicles were repaired at DCSL-owned Formula World was discontinued after the privatization reversal.
Formula World facility Sidhu was owned by Distilleries Group, not by Sri Lanka Insurance. So with the judgment, Distilleries Group moving out of the ownership, there was no further official relationship between us and Formula World. So then it's a matter of us deciding whether to continue that facility or not based on commercial grounds. So right at the moment, we do not see much of a benefit continuing that facility as an exclusive facility.
The computer systems are also being migrated from Lanka Bell to SLIC. Court ordered the government to return to distilleries the 6 billion rupee purchase cost and profits under private management. It's estimated profits under DCSL management could touch 4 billion.
Profits has to be calculated after complete audit from the time of privatization. So picture can be completely different once that audit report comes out.
Analysts point out that SLIC has a strong foundation to build its business. Discord or politicization, however, could ruin that opportunity. Sources say the Secretary to the Treasury had to intervene in a power struggle between SLIC Chairman Pradeep Karyavasam and its Managing Director. At SLIC, the Chairman's role is non-executive.